Hello, this is Andrew Abraham. I'm going to try to explain to you an idea of a breakout trade on HIBB, which is HIBB Sports. And what's interesting with HIBBs is you want to buy the strongest stocks and you want to sell the weakest stocks. And the way I determine that is through a smooth rate of change. You can see here we had a breakout trade. It was on October 7th. First of all, I want to clarify something. This is a hypothetical. I did not take this trade. And it's just done for example, a learning example, and it has extreme limitations. There's a special ruling on this, but I just want to make it clear I did not take this trade. It's a hypothetical. But what's interesting, it's just use it as a learning experience. Basically, we took out an X period high. What I'll teach you is there's no magic number to pick that X period. You decide on your own. I use a certain period. I was risking also 1% of the account as an example. And what's happening is it just caught the trend. And this is what the whole idea is, what we're talking about, trend following. And you can initially see there's an initial stop here, which is basically based on standards of deviations away from the entry. Because if it got to this point, then obviously the trade didn't work. So it was almost like a seatbelt if the trade didn't work. And then once this trade started working, and really clarify when I'm saying started working or didn't work, means I don't even take money into the equation. Forget about that. It has nothing to do with any of that. It's just either the trades work or they don't. And the other thing also bear in mind is most of the trades won't work. But it follows the trade as it's moving up. And this is just an example, a real short example of HIBB right here, where you're buying the strongest on a relative basis, putting in a low-risk trade where basically we risked on a $100,000 account 1%. So it was about $3.57 approximately to see if this trade would work, 1.02%. And you're going to have a lot of trades that don't work. And then what really makes it is your position sizing. If you can put on a lower risk bet and have more position sizing or more quantity, you can have a bigger run-up. I want to show you something else now on the next chart. This is our HIBB Sports chart again, or HIBB Sports. And what's interesting is one of the things that you need to do is you want to buy strength, you want to sell weakness. You need a way to determine what is strong and what's not strong. I use a smooth rate of change, and in the course I tell you exactly how to do it. But what is the idea? We're momentum players. You can see the move up in 2004, and then we retraced. There's always going to be retracements. But you could have bought the breakout here, a simple breakout idea, and had an amazing run. And depending on where the stop was, I don't have it on this chart, but you might have continued and you stayed in the trade and then continued basically all up from let's say I don't know, $15 range up to a $30 range, and then you might have gotten out here. But this is what the whole idea of buying breakouts is. Look at the breakout on this line across. You would have been buying here. Again, I don't have my stops on this chart. You might have survived this breakout because it looks pretty close. And you've been riding this stock up from in the mid-30s up to 45. But I want to clarify again, this is a hypothetical trade. I did not take this trade. Hypothetical trades have severe limitations. But this is just for educational purposes about breakouts. And let me give you another point of the other type of trade that I try to teach you is when we're trend following, you have the breakout trade, which I showed you here and here. And then you don't do anything till here. But also, if you start from here, you're at a low of a $10 range, and you can see this big move up, and you have a retracement. You buy the breakout of that retracement, and then you go for the ride again, and you go for profit. There's always waves or swings. You go down, and you buy the high of here, and you can risk to here. You can look at a daily to get a little bit more of an idea. But there's always opportunities. You're in an uptrend, you go down. You could buy the breakout of this bar and go for the ride again, or the breakout of this bar. You never know what's going to happen. And you have to bear in mind when you're trend following, most trades don't work, but what you're doing is you're limiting your risk per trade. You look at it risk per trade, risk per sector, open trade equity risk, your margin to equity. You take all those into account before you put on a trade. But you're taking small risk bets in order to ride up eventual trends, and the trends always, they do come out. I don't want to say always, but there are trends. You do ride them, you do have profits, but all in all, you do have a lot of small losses. This is Andrew Abraham. I'm looking to be your trend following coach, trend following mentor. It's no rocket science, magical system or holy grail system. It's really how you think, and you have to keep on putting on these basically simple, robust ideas that I teach you, and over time you should be able to trade for a living like I do. Thank you very much.